set up this meeting with the data coming into it that they're going to skip. I think that's the new vernacular, or the new word they put in their vernacular. And I guess the skip is really telling you that they're not done yet, but they've done enough with the as you've mentioned, the 10 consecutive hikes. They've done 500 basis points worth of hikes, and they've got to a point now where I think with the lag effects of the tightening they've done, as well as the uncertainty around what kind of tightening from the lending standards from the banking stresses earlier this year, they can, kind of afford to sit here and pause a little bit. And as they'll tell you, it's a skip because they may need to go more if they have to, but right now they want to be able to sit here, read the data, and see where they're going. And it's a risk management approach for them, and I think it's a smart move at this point.
Have you ever wondered how the Federal Reserve's interest rate hikes or cuts could impact Tesla's stock performance? Why should Tesla investors pay close attention to the decisions made by the central bank? Today, we're about to uncover a financial twist that has the potential to send shockwaves through the stock market. We're going to explore the hidden connections and unveil the reasons why a lower interest rate by the Federal Reserve could be a game changer for Tesla stock, a long-awaited catalyst that can drive the stock price to higher levels. So be prepared to have your expectations challenged and your understanding of market dynamics transformed as we delve into the captivating relationship between Tesla's stock and the Federal Reserve's interest rate decisions. This is a video that you don't want to miss.
Okay, our chart of the day, it is Tesla. It has snapped that 13-day winning streak. Bryn, more than $200 billion in market cap added over that period of time. It's just astounding when you really put those numbers into context. 13 straight days, $200 billion in market cap. What do you do? By the way, target raised to 305 at RBC. Just give us the thought process of an investor in this name watching that run happen and what you think now.
Yeah, so, I mean, it's a volatile name. Obviously, Elon is everywhere, has his hands in so many different aspects. So I have half the position I just own outright, and the other half I sell calls against. And I keep getting those positions, which I'll sell like 15 to 20% out of the money calls, but the stock keeps moving higher. So that position will get taken away. So I have my core, and then with my other covered call, as the stock has moved higher, I am very comfortable selling calls against that. And if it gets called away, so be it. Because you have to understand, Tesla is probably the top option traded stock. It has been all year. And so there's a ton of option.
The performance of Tesla stock has been simply overwhelming in the first half of this year. Year to date, shares have risen by nearly 140%, recovering from its dramatic drop in the second half of the last year. This rebound has been driven by a broader recovery in tech stocks, along with company-specific reasons. In addition, Tesla was one of the biggest beneficiaries of the AI boom during the first quarter of this year, considering its car's autonomous capabilities. And now things might start to get even more interesting as market conditions begin to improve and Tesla starts to benefit from this latest catalyst. Hey guys, welcome back to Tesla Tomorrow. The Federal Reserve has decided to hold interest rates steady, although officials signaled they are prepared to raise rates again this year to tame inflation. The central bank maintained its benchmark interest rate in the range of 5 to 5.25%, the first time since January 2022 that the FED made no change to interest rates following a policy meeting. Its officials, however, raised their interest rate forecast for this year, signaling that rates could raise as high as 5.6%, and implied 2 additional interest rate hikes are likely this year. According to Federal Reserve Chair Jerome Powell, inflation pressures continue to run high, and getting inflation down to the Fed's target still has a long way to go. By the next year, FED officials see interest rates falling by 100 basis points to around 4.6%, higher than the 4.3% forecast in March. There are several reasons why this pause will be helpful for not just Tesla stock, but the entire stock market at large. And over the course of this video, we're going to uncover the untold story behind this fascinating relationship. So let's get started. But before we get on with the video, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. To understand why a lower interest rate by the Federal Reserve could benefit Tesla's stock, we must first delve into the concept of the cost of capital. As a capital-intensive company, Tesla relies on borrowing funds for various purposes, including expansion, research and development, and infrastructure investments. When the Federal Reserve lowered interest rates, borrowing costs decrease, making it more affordable for companies like Tesla to access capital and finance their growing initiatives. Lowering interest rates can have a direct impact on Tesla's profit margins. With reduced borrowing costs, Tesla can allocate more of its cash flow towards operational expenses and innovation, rather than hefty interest payments. This is a boost to profit margins that can enhance Tesla's financial performance and potentially drive investor sentiment, leading to a positive impact on the stock price. The S&P 500 has surged by more than 20% from its most recent low, marking the start of a bull market, and retired Wharton professor Jeremy Siegel doubts that the market will keep surging or hit a new low. He predicted that while the stock market rally will run out of steam, the US economy will sink into a mild recession, and the Federal Reserve won't hike interest rates any higher. The retired financial professor noted that this recent bull market move is no guarantee that we are on or even out of the woods for the downturn, adding that he remains cautious and does not think that we have the start of a major up move. While the FED is widely expected to lift rates next month, he did suggest that it might refrain from tightening its monetary policy anymore. He said, "We're entering political season, and there is already a ton of pressure not to create a deep recession. I expect a shallow recession that the market has arguably already positioned for." He did, however, warn that during both the dot-com and housing crashes, stocks rebound by over 20%, then promptly erased all of those gains. Lower interest rates can act as a catalyst for investment decisions. As borrowing becomes cheaper, Tesla may be more inclined to pursue strategic initiatives such as factory expansions, technological advancements, and market expansion. These investment decisions not only demonstrate confidence in the company's long-term growth prospects, but can also attract investors seeking companies with a proactive approach to capitalizing on favorable market conditions. A lower interest rate environment can affect Tesla's valuation and stock market volatility. As borrowing costs decrease, discounted cash flow models used to value companies like Tesla may yield higher present values, potentially raising the stock's perceived worth. Moreover, lower interest rates may prove to be supportive during periods of stock market volatility. As investors search for stable investments amid economic uncertainty, Tesla's solid financial position, coupled with the beneficial impact of lower interest rates, may make it an attractive choice. Tesla's ability to benefit from lower interest rates can also provide a competitive edge in the industry. As its borrowing costs decrease, Tesla may have more flexibility to invest in research and development, pursue technological breakthroughs, and stay ahead of its competitors. This advantage can bolster Tesla's position as an industry leader, fostering long-term growth and cementing its dominance in the electric vehicle market. However, it is important to note that while the FED announced a pause in interest rate hikes, the firm's chairman noted that this shouldn't be called a skip, adding that the purpose is to give the economy more time to adapt to prior hikes while letting FED officials see the full consequences of the banking turmoil that stirred up the financial system in the spring. A lower interest rate by the Federal Reserve reflects the central bank's outlook on the economy. In terms of economic uncertainty or sluggish growth, the Federal Reserve may choose to reduce interest rates to stimulate lending and economic activity. Judging by the recent positive economic outlook, future hikes by the FED may not be as intensive as they used to be. But what do you think? Let us know, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.